Hello and welcome to this Wednesday's morning market briefing. We've got a lot to talk about, but firstly, Republicans prepare to torpedo bipartisan deal for US aid to Ukraine, as well as that the a Federal Reserve official says hot labour market will not derail interest rate plans in regards to cuts. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, we'll come to that near the end, so make sure you stay around so you see that. Before we get straight into it, make sure you subscribe. But the first article to talk about, though, is in relation to Republicans. Now, resistance is rising within Congress against a bipartisan deal supported by Joe Biden, with this deal promising billions of dollars in aid to Ukraine, as well as stricter immigration policies. Now, of course, the US Congress has had a great deal of issues recently, especially following Kevin McCarthy's ousting. And now that was ultimately the kind of turning point, it does seem, within Congress in regards to, funding for Ukraine, funding for, certain Democrat initiatives, and also other sorts of things. That is really where we did start to see this kind of Republican rebellious group within Congress grow. Now, obviously, we are in the election year of 2024 for the Republican presidential, well, not the Republican, sorry, but for the US presidential elections, and we are currently experiencing the more important Republican primaries, but also the Democrat primaries as well, where we will see who the party nomination is to run for president, basically, to go head to head with the opposition party in order to become president. And at the moment, it does seem like those two candidates will be Democrat Joe Biden and Republican Donald Trump. And this is despite the continued kind of criminal issues and legal issues around Trump. Of course, we also know Biden has had, lots of controversy in regards to both his age and also his certain dealings and kind of situation with Hunter Biden. And this has created, an all-round kind of chaotic atmosphere in regards to those two. But ultimately, where the chaos really is taking place at the moment is within Congress, and especially in the House of Representatives. Now, of course, after I believe the midterms, we did see Congress basically split, with the Republicans, I believe, now controlling the House of Representatives and the Democrats continuing to control the Senate. And what this does really create is an issue where, policy which maybe favors, Democrat initiatives is able to pass through the Senate. But when it comes to the House of Representatives, it has a very hard time of passing just because, Republicans do dominate there. And it really is the vocal minority of Republicans which are creating the great deal of issues when we're trying to pass things such as bipartisan deals. And Ukraine has been a bipartisan issue since, of course, Russia's invasion into Ukraine. That said, certain Republican right-wingers, certain hardline Republicans such as Marjorie Taylor Greene and others have ultimately, kind of taken a bit more of a skeptical view on the Ukraine situation, as well as, kind of using Ukraine as a way to attack Joe Biden somehow. As we have seen before, Hunter Biden's situations and issues have previously included nations such as Ukraine, where obviously there was a great deal of corruption. So ultimately, we have this tough situation for Congress to pass these maybe important bipartisan deals, but ultimately they're kind of left unable to do such a thing because they have that Republican vocal minority within the House of Representatives, and that's kind of causing issues all around for the House of Representatives as a whole. Added to that as well, of course, we do have Trump, which does ally himself with more of those kind of hardline Republicans within the House of Representatives, and as a result kind of gives those more hardliners a greater deal of kind of justification for their actions in regards to kind of messing with the political process and that kind of thing. And it does seem at the moment like those Republicans, those hardline Republicans, their key focus is in regard to immigration, and especially the current crisis on the southern border. Of course, we know, and I believe we've spoken about before, the current issues between, the state governance of Texas and their kind of policies towards immigration, and the federal government, that being, Joe Biden's administration, and the conflicts between those two administrations or governments on how they should deal with the current issues of immigration, as we have seen recently a great deal of illegal immigration flows through the southern border, especially in Texas, and that's kind of annoying certain Texas residents, as well as certain Republican figures within Texas, which are now making it their own personal effort to deal with those issues by implementing their own security border measures. But ultimately, so to kind of wind up on that, it does seem like we're seeing a great deal of chaos within Congress, and ultimately understanding what's going on is very, very important. Not only does chaos in Congress kind of cause certain issues for US equities, as it's harder for US equities to kind of understand that they have a strong, stable backing with the government kind of in chaos, but also it kind of sets the scene for how the next presidential election will go, as we do get closer and closer to those dates in November. And when that date does come, when we do get closer to the heads up match really between the two candidates, we will then be able to see this true chaos play out, and I'm sure that will be affecting markets greatly, which is why it's important to understand what's going on in Congress. Now, to cover this article quickly, let's go through that. Now, this legislation is worth $118 billion and was agreed on Sunday in the Senate by both parties. Passing this legislation is more dire than usual, due to it possibly being the last chance for Biden to secure new military support for Ukraine. To secure the deal in the Senate, a compromise on curbing immigration was made, with Democrats agreeing to restrictions on asylum, which has been a key concentration, point of contention. Trump recently, however, has trashed the efforts made for the deal, as he attempts to ruin any bipartisan deal agreed upon. Now, not only can this largely be explained by him wanting to worsen the current kind of Biden administration track record and their kind of achievements, but also ultimately Trump is trying to sell Biden as a very divisive figure. And ultimately, this is kind of, once again, a part of that is, Trump kind of messing up any of these bipartisan deals to basically show Biden can't actually create any bipartisan deals, or can't kind of encourage any bipartisan deals, and this is why his administration isn't good enough. And that kind of anti-establishment and kind of attacking Biden for the lack of unity within the country has been a key thing that Trump's been doing. Now, Trump does say that the bill is a gift to the Democrats but a death wish to the Republicans. Trump is currently the front runner for the White House bid and prides himself on his isolationist views, with him recently using the southern border crisis as a stab at Biden. Trump is largely against the bill, seeing as he thinks that it absolves the Biden administration for the failures that have occurred on the southern border. Following Trump's comments, Republicans in the House issued a joint statement saying the bill will be dead on its arrival in the House. So some very important news, most definitely in regards to Congress. Definitely keep your eyes on that, as there is a great deal of chaos taking place at the moment. Next to talk about, though, is the Federal Reserve, which is more so related to markets, which may please some of you, but ultimately it is so important to still cover those topics in regards to, Congress and US politics. Those do affect markets as well. But here we are once again returning to the Federal Reserve with a key leading Fed official stating that despite recent data, the US labor market is cooling. This comes following last month's unexpectedly strong employment numbers. And this has been a key point that we've been talking about this week, is those strong employment numbers that we did see last week on Friday. And that was the NFP figures, where we did see over 300,000 workers be added to payroll, which was far higher than what economists had been expecting. Now, why is this significant? Well, when we're seeing a great deal of employment, kind of coming back into mixture, we're seeing lots of people being added back onto payroll, more wages, greater wage growth. This is when we are starting to see some inflationary pressures within an economy. And this is important to note because, of course, the Federal Reserve has now for a long time been trying to deal with the current issue of high inflation. And a key issue with that has been the labor market, which has been very hot. However, data before last month's release was kind of playing into the Federal Reserve's picture of we're experiencing a cooling labor market and things getting better. However, that bit of data that we did receive last month on Friday has now kind of reinforced the opposite message and picture, which is that the labor market is still hot, and maybe inflation is still going to be persistent within the economy, and therefore rates are going to have to stay higher for longer. And we've already seen that affect markets greatly. But here we have an actual more dovish kind of Fed official kind of actually stating that maybe that data is not so important after all, with the NFP figure last week presenting 353,000 jobs being created last month. Her statement aimed at reassuring investors and others that rate cut plans were not to be derailed. According to her predictions and goals, the Fed's interest rate should fall gradually in 2024, and that's what we've heard repeatedly from the Fed, especially Jerome Powell, which has kind of spoken about rates falling by 0.75% over 2024. Now, the Fed official in question, called Mester, has previously supported rate cuts three times this year, which is in line with the forecast by the Fed in December 2023. So they are expecting to cut rates 3 times. The more hawkish Fed official, though, Michelle Baumann, however, has said that employment data is pointing to a labor market which is not cooling and could keep inflation high. Mester has, however, acknowledged the wage growth has remained higher than the target level, but has said that improvements in productivity justify such wage growth, and thus the growth is not indicative of inflationary pressures. So a very important topic to keep your eyes on. Anything to do with the Fed, any of these Fed official speeches massively move markets and definitely influence the way that investors perceive the way that the Fed is looking forward in terms of its monetary policy. So keep your eyes on things to do with the Fed. Next to talk about, though, is the charts, as we have covered the articles now, but of course we are starting on the US 30 in regards to US indices as a whole. However, unlike most days, US indices, there's not much to say at the moment. Now, US indices did rally, of course, have been rallying most recently, at least for the past few months, after the Fed did change its kind of position on interest rates and kind of move to a more dovish position. Ultimately, though, as we've just spoken about, that NFP figure that we did receive last week has dramatically moved markets as we've entered the new week, as we have seen US equities sell off, especially the US 30, just because individuals and investors are now perceiving a more hawkish monetary policy from the Fed in the future, and that is why we are seeing a sell off. Ultimately, though, price hasn't made new lows and is still within the kind of current movement range to the upside. So definitely we're still in a bullish position. And after the Fed official, kind of comments today from Mester, I believe, ultimately this is kind of reinforcing the message that, whilst last week's data kind of represented a more hawkish message or a more hawkish picture for monetary policy. Ultimately, that data can't be taken too seriously, as other data is also at play, and we need a kind of a longer period of data before we can make decisions like, okay, there's still a great deal of inflationary pressure within the economy. So that's something that's definitely important to note, and it does seem like following that Fed official speech, we have seen price move to the upside. So definitely keep your eyes on the US 30. We're kind of ranging around, consolidating, not doing too much too interesting at the moment, but still important to note for sure. Next to talk about is the dollar, where we are now seeing a sell-off from this key liquidity level that we noted yesterday. And this obviously came following, the push to the upside from the dollar that we did see after the NFP figure on Friday, with that, reinforcing the more hawkish picture as we've already covered, and therefore pushing the dollar to the upside as investors do kind of, get their money in to the dollar in hopes that they kind of are able to grasp that US dollar interest rate for longer than was previously expected. That said, in yesterday's action, it does seem like price has sold off from that key liquidity zone, as to be expected. If we are still looking bullish on the dollar, however, we could definitely be looking at these key levels which price could retrace to. And if we just draw out the liquidity zones and the Fibonacci levels, we can instantly note the key 50% Fibonacci level, or even the 3820, but definitely the 50%, which line up with that key liquidity zone, which price could now retrace down to and then move and continue to the upside. So that's definitely an important level to keep your eyes on in regards to the dollar. Definitely keep your eyes on that. Next to talk about though is Euro USD, so still on the topic of the dollar, where we have seen price collapse even further to the downside and is now kind of sitting around the bottom level of the market, where price hasn't broken below since November 14th of last year. So definitely a significant level for Euro USD at the moment, and still a very strong liquidity level that we're at right now. So definitely we could see a great deal of bullish momentum to the upside from the current level. So keep your eyes on Euro USD for upside opportunities. But then again, if price does continue to the downside, we could definitely be looking at some continued short opportunities. Keep your eyes on Euro USD. Next to talk about is pound yen, which has now reacted to the short-term fib of the 61.80. That said, how significant this reaction is, we can't be too sure, as price is still sitting around that 61.80 and has not moved away just yet. It will be interesting to see though, if we do start to make some bullish moves, how far this can then move to the upside will be very interesting, as we do have this very strong resistance level around the Fibonacci extension zone. So definitely keep your eyes on that. Next to talk about though is Bitcoin, where not much is happening apart from price ranging around and failing to gain much momentum. So still keep your eyes on Bitcoin nonetheless. And next to talk about is gold, which has reacted to this key liquidity zone around the 2020 level and is now pushing to the upside. Obviously, gold has been moving very volatile recently, following the news in relation to the Fed, the US economy, and high world tensions. So all of that's definitely playing into gold and causing it to be very volatile and ranging greatly. So keep your eyes on gold. Lastly, to talk about on the charts though, of course, is oil, where not much is happening. Price has found that bullish momentum that we were talking about yesterday, but not much momentum has been gained, and price is still kind of trying to find its feet around the old level of liquidity that we had noted from before. And yeah, not much is happening on oil, but still keep your eyes on that. World tensions in the Middle East are definitely moving gold and oil a lot, so keep your eyes on that. Finally, to talk about though, of course, is the economic calendar, where we are getting quite a bit of data today to cover. Now, firstly, we will be getting the Swiss unemployment rate figure, as well as the French balance of trade figure and the Italian retail sales figure. Followed by that, we're getting Spanish consumer confidence figure, as well as the US mortgage applications data. And then finally, to add on to all of that, we are having we are getting the Canadian and US balance of trade figures, And finally, numerous Fed officials are speaking today. So listen out for all of that. We've covered lots on the articles, lots on the charts, and lots on the economic calendar. But that's all from us at Wildwood Capital. Have a great one. See you later. Bye.